Senior housing transaction activity has truly accelerated in the past 6 months. If we take a good look at what has occurred just in the healthcare REIT sector of the business, it's been nothing short of massive. $23+ billion worth of transactions have either been announced or closed since this past August. In 2011, $12 billion worth of transactions have been announced. So when we add it all up, it has been a very impressive start to the year and proves to us conclusively that the foundations are in place for growth going into the second part of this year. So why have foreign investors taken a more aggressive look at this space? Well, the industry certainly was resilient during the Great Recession. We were not impacted the way other real estate sectors were impacted, and the fundamentals of this industry were strong and continue to get stronger month by month. We are looking at returns to foreign investors that are significantly higher than what they're looking at in other real estate sectors. So we are quite bullish on new capital entering the United States and specifically being earmarked to this business. 2011 will be a defining year for the debt markets in the senior housing business. The GSEs continue to be the dominant player in our space. Out of a portfolio, multifamily portfolio of approximately $400 billion worth of Fannie and Freddie multifamily loans, senior housing only represents $16 billion, or approximately 4% of the combined portfolio. If we look at the Freddie Mac portfolio alone, out of the $6 billion worth of senior housing loans in that portfolio, there is a 0% default rate in the senior housing business. I think we would agree that's quite impressive. The second half of 2011 is going to show an increased volume of real estate transaction in the senior housing space. New investors have to take a very careful look at not just the numbers, the pro formas in the transaction, but the operating philosophies of the management companies that currently are operating these businesses, especially if they want to retain current management. Longer term, the prospects for the industry remain solid. This remains a need-based product that the real estate community will continue to look at going forward.